Absolutely. This is a very key psychological move for the Malaysian currency, and I personally believe that the ringgit has now moved on to the next phase in its recovery of what has been very steep and dramatic losses over the past year. But this is very positive. The jump above $35 in crude oil 2 weeks ago, alongside with some other external factors, it's provided some upside momentum for the Malaysian currency. And more importantly, it does now appear as if this very dramatic and ongoing period of aggressive punishment, it's come to an end right now.
And against the euro, the ringgit could be retesting a 2016 low. But what could put this kind of momentum for the ringgit at risk?
You're right, we are seeing some aggressive momentum for the euro currency right now, and it's literally because of pushback US interest rate expectations and subsequent dramatic dollar weakness. And because of this, the Malaysian currency and the euro are traded in more of a range.
And Jameel, we've been hearing commentary that perhaps oil prices, they may be bottoming out with both WTI and Brent trading above 41 bucks at some point today. So, is that something which could give the green light to the bulls?
This is very optimistic news, and I think what we need to do is revisit our interview back in January, because we pointed out that $35 region for WTI oil was huge and critical psychological resistance. Now that we've managed to close above $35, the oil market, specifically WTI, look like they're going to begin trading in a range between $35 and $42 or $44. This is going to create optimism that the oil markets have bottomed out, and more positively for Malaysia, it's going to increase the sentiment towards those economies that are reliant on commodity exports, and also increase the emerging market sentiment. So this is why it is a green light for the bulls right now.
Now, given the stabilization in oil that is helping Malaysia as a default risk, we're seeing a drop in the 5-year CDS. ING says there's more to go there. Do you agree?
I think so. As long as the oil markets are able to maintain their rebound, dollar demand for the next couple of months should remain basically with a lack of traders' confidence towards the dollar. And this is because of pushback US interest rate expectations. I mean, the Federal Reserve were not realistic this year to say that they could raise interest rates 4 times. This was very ambitious, specifically when you take into account how consistently repetitive the Federal Reserve last year were to say that they would only raise interest rates once and then a very slow pace. As soon as they said they'd raise interest rates 4 times, this put a lot of pressure on the central bank. As soon as the markets found a reason to push back US interest rate expectations, this consequently led to aggressive dollar weakness, and it's helped the Malaysian markets and the Malaysian economy a lot, and we think that this new trend could continue.
And what do you make then of some of the other Fed official commentary, the presidents of the San Francisco and Atlanta Feds, for example, saying that we might see a rate hike in April? What does this mean for dollar outlook, and then from there, the emerging currency space?
Personally, and we've been saying this for a long time, and so was Federal Reserve Chair Janet Yellen, the pace of US interest rate hikes is going to be very slow. I expect that there's possibly still room for 2 interest rate rises this year, but most analysts and economists, market expectations think they'll be in the second half of the year. Now, in regards towards whether they might raise interest rates in April, we need US economic data to pick up, but more importantly, we need a really strong non-farm payroll report, the amount of jobs the United States economy created over the previous month, which would be released in about 10 days' time.
Now, earlier this month, Bank Negara Governor Zeti Aziz saying the ringgit is reflecting medium-term fundamentals. We do have February inflation data out this Friday. What are you expecting?
Okay, well, look, the Malaysian economic data, it's still reasonably robust when you consider all of the different external risks out there. For example, there is prolonged weakness in the oil markets. There are these expectations that investors might want to move away from the emerging markets and towards safe haven assets. We're still a little bit unsure on how the China downturn might actually impact the emerging markets. But inflation, we need to look out for this because we've seen such the Malaysian currency's trend has been weak for such a long time. We need to see if this actually leads to another further rebound and higher inflation read in this Friday, which might then put some pressure on the Bank Negara as well.
Now, month to date, we've seen global fund flows into emerging assets minus China at something like $10 billion. When it comes to currencies, though, who are you seeing as winners and losers so far this month?
Well, the emerging markets are definitely benefiting from this increase in sentiment towards the commodity market, specifically the price of oil, and the pushback US interest rate expectations. But the real winners in the currency markets right now are still the Japanese yen. One thing that I regularly say to traders is, look, the Japanese yen is your friend in times of uncertain market environments, when there's concerns over weakness in the commodity markets, concerns about the global equities. Japanese yen is appealing.
Now, final question on the ringgit. Do you think that there is still a potential for us to return to those 430, 440 levels at some point this year?
I think it would take time to see whether this might happen later in the year, but right now I'm much more positive on the Malaysian currency. I think that as long as the oil markets do not slip back below $35, this is a critical psychological level, the emerging market sentiment will improve a little bit more. We do think over the next couple of months, traders are going to continue to show a little bit of a lack of confidence towards the dollar. This will help the Malaysian currency as well. I personally think that the Malaysian currency is bottomed out right now, like the oil markets, and I think there's reason to believe that the dollar ringgit can actually slip below 4.